What's up, guys? Let's look at the price of Bitcoin today, some correction we had, and also today I will show you one interesting, I wouldn't call it the indicator, but it's still a kind of a data set which might help you to make proper trades, profitable trades, but this is a little later. And also we'll open the trade, like I would suggest you to open one trade according to the current price action. So everything will be in this video. So let's start with the current situation, some technical aspects. Well, first of all, we are below this kind of wedge, this support of this wedge. We broke it downwards. Also, this daily candle is a massive red candle, first with such a depth through the whole rise which we had here. And yeah, it's a little bit alarming in terms like it's indicating for the potential continuation for of this correction. In fact, we reached $10,500, and although we still had some room to grow and there was not kind of an acceleration at the last part of the growth, but still we didn't make any higher. And yeah, it might be a very small correction as we had before, and we'll continue to push the price higher to new highs like $11,000, $12,000. But it is very likely as well that we are reaching the local high here, and now we finally will have the correction, more deep correction than all the previous ones for the whole growth which we had. And we actually still in the ascending channel, around the bottom of this channel, so we might test it and then have a pullback from it. On the daily time frame, we are above, a little bit above Bollinger Band's baseline. It's actually very close to this line of the bottom part of this channel. So again, we might test it and then have a pullback to the upside. But on the 4 hours time frame, as you remember, this is the time frame which is often served as the indicator for the local trend. We are below the baseline, and like as often happens, we might test it and have a rejection if it is a truly beginning of the more or less long-term or mid-term downtrend. I must point out the behavior of RSI, because RSI had this massive support line through the whole rise, and also this resistance line here. We actually broke above this resistance line, but it appeared to be a fake out, and we returned back to this wedge, ascending wedge. They used to be broken to the downside statistically, and then yeah, we broke it lower. So again, if it is not the deep correction, then we might test it once again, and then it will be the decision point whether we will return to the growing scenario, or we will have the continuation of the downside move. And yeah, this is the interesting point in terms of the data set, this kind of indicator which I wanted to show you. And this is basically the order book depth for different exchanges. Now we are on BitMEX, and you can find this source for free. They are different, of course. There is a paid version, but you kind of able to use the free version pretty much with most of the data which you need. So their source is called trdr.io. I will leave the link in the description to this video, and I've seen this on the video of Tonways, and yeah, that was the very interesting points which we can see here. For example, like, well, you see this, let me explain what basically you see on the chart. So of course this is the price, and this is like green areas, green kind of clouds or shapes here, and red parts above and below the price. So you can see that they are changing in terms of the position to the price and the color. So basically it represents the depth, the thickness of the orders in the order book. And greens are the bids, which are buy orders, and reds are the asks, so the sell orders. So for example, just let's look at how it works basically. Let's say from here we didn't have much of the buying orders here, but we had a lot of the red sell orders. and that led to the fact that the price actually moved lower. It faced this area with a huge number of the buying orders, and at the same time the number of the sell orders faded away, and then it means like we have a lot of support, and it brought the price much higher. And then at some point we had like we went even higher because actually the buying orders moved with the price, and eventually somewhere around here we started to see that the sell orders kind of catching up, and at this point we have a lot of the sell orders, especially this area, but almost no buy orders. So buyers got exhausted, and what we see after that, we see the decrease in the price. And it happened until the point when the price reached this kind of a higher density buying orders, at the same time almost no sellers, and after that we see the pump. And again at this area, so what we can see is that we see the increase of the sellers and kind of a less dense buy orders, and then eventually we dropped. So you can continue for all the rest of the price action. Again, the recent drop was basically the massive amount of the sell orders here and almost no buying orders in the vicinity of the price. So, and this is kind of a almost well, no, I wouldn't say no, but it's less bright area, so less buying or buy orders, and then we dropped. And also you can look at the order book, basically not from the accumulation perspective, like when a traditional way, but from the actual number of the orders at certain areas, certain zones of the price. And you see, for example, that for the sell orders, you see here's the 1% of the sell orders, here's 2.5%, here's 5%, but for buying orders it's 1% only here, and no 2.5 or 5% any area around it. And moreover, it's interesting that you can look at different exchanges, for example Coinbase, and on Coinbase the situation is even more pronounced. So as you might know actually that it is said that on a true bull market the price is moved by the spot orders, spot market, basically, like not derivative, like real demand, and vice versa. On the bear market you might have the price move associated with or directed by the spot orders by sellers, right? So what you can see here, again, this area was a massive number of buyers and no sellers, and again here we have the kind of a more or less balance, although again sellers are kind of catching up, and at this point no buyers, basically no buyers, but still remaining some sellers. We had the drop, and again here a lot of buyers, no sellers, we have the rise. And continuing with that, almost no buyers at the vicinity of the price, a lot of the sellers, we had the drop, no buyers at all recently at this point, and a lot of the sellers here. And yeah, what after that we had this drop. So what we have right now, and this is basically along the many other exchanges, including the derivative exchanges like BitMEX, we have here kind of a fading the number of buyers, and I would say catching up number of shorters, number of the sellers, but still it's not that massive as we had here. So maybe we will still need to go a little higher in order to shake out maybe some people who went short at this area, who opened those shorts and these shorts as well. And also after that, maybe the number of the sellers will increase dramatically. Like as soon as we rose above $10,000, you see the density of the sell orders here increased a lot as well. So I think that is if the price will go higher, and this is confluent with this 4 hours time frame Bollinger Bands baseline, we are actually reach this higher high. So we will go above this higher high. We will reach the 4 hours time frame Bollinger Bands, and then the sellers might catch up. At the same time, it could be a kind of a test of this resistance now, which was a support for the wedge. And yeah, if it will have a continuation of this correction, then we will have a pullback from this zone, and price will go much lower. Of course, it might be the end of this current correction, but and then the price will go much higher. And basically, this is the way how you may trade it. And here is the SnapX exchange, which I introduced you in the last video, together with the way of the risk management calculations. So if you didn't see it, please go ahead and watch. I will leave the link in the right top corner. So if you would want to make the same trade, because it's useful to use the dollars denomination which is available on SnapX, and then yeah, please go ahead and watch this video, because it's important to not to lose your portfolio by implementing this strategy. So again, by doing this, I would say that we can make a very reasonable trade here. So I would say that we might open a short order from 10,140 around, with the expectation of the fact that we will go above this high but not above this high, and then have a pullback, the rejection, because of the expectation of the continuation of this correction. Of course, it might not happen, and we may continue go higher, but this is why we are setting the stop order at the area of $10,350 around this high. So yeah, we could lose some portion of our portfolio, but this is the way of you are trading basically, yeah. So you're trying to catch the more or less reasonable trades in terms of the risk to reward ratio, and do it many times, so eventually you are in a profit on average. And yeah, it's actually possible that we will not have this rise, so this short open, or the short position will not be triggered, because we might go like much lower even from the current area. But I wouldn't say that it's reasonable to open the short from this point, because again, stop will be too high, and it's very likely that, well, again, it's very low zone considering the depth of the correction which happened, so it's not reasonable to do that. I would say still that this area is reasonable for short. So how we do that? Pick the sell short button. Let's have a limit short from $10,101, and the margin here I used 400. Stop order 10,352, and take profit is 9,534. Then the loss would be $83, and profit will be almost $240. So almost like 3 to 1 reward to risk. And then you click sell, and also here you can use the snap deduction. You need to click on this button to make it active, and also you can look at the snap points here. So asset, snap, you can look at your balance of snap points, and also increase this number by using making like different tasks, like invitation, or maybe link your email, join Telegram. So you'll have some number of the snaps for your trading, which you can use for deducting your fees for trades. So I already opened this trade. It's pending because the price of course didn't reach this number. As soon as it will, then we will see how it will play out. So guys, as usual, not a financial advice, just my personal opinion. Don't blindly follow the trade, but if you'll do, then I will keep the link to this exchange below. If you'll use this link or the promo code, you will get 1000 snap points from this link, and this is actually equivalent to $10, so you can use those for the transaction fees coverage, or you can eventually transfer it to Tethers with the like 10,000 snaps is equivalent to $100. And yeah, this is how I would suggest to make a trade in the current situation. And also keep an eye on this dataset with the order books. I think it's really powerful, especially in the kind of a very short term, maybe like even 5 minutes or 1 minute time frame, to see where the flips happen in terms of the increased number of shorts, increased number of longs, and so on and so forth, so on, where do they go, and so etc. Well, anyway, let's see how this will play out. I will keep you updated, and I hope that it was useful, guys. Thank you for watching.